Hi and welcome to the Market Alert for Wednesday the 26th of May 2021. So bonds and bullion bid stocks skid as stimulus sentiment slumps. Basically means that people's stimmy checks aren't going into the market amid the lowest volume of the year. So certainly interesting there. Are people moving out of the stock market? Well, the implied volatility is interesting for yesterday. A bit of a down day, certainly at the open for the Dow, 1410 down to 1398, which wouldn't normally be the case, but back below 14% on the implied volatility. Maybe again we're getting into that sort of calm before the storm, but prices up on the overnight, which we'll look at in just a moment. The yield really down to 1.579, nothing to report there. And news for today, we've only got the crude oil inventories. As we said at the start of the week, there's not a lot on the news front. So let's have a look at the Dow. And yesterday you can see that we had a down day. This kicked off at 2:30 and moved to the downside. We'll look at that in just a second. But the market in the daily chart, again, it's still struggling, as I've mentioned before, with this resistance across here. The market getting through this, but then coming back. Also still stuck at the two fibs that we've got here as well. One drawn from here to here, and the other one from here to here, projected back up. So the market needs to take out this 34,486 in the Dow in order to move higher. Let's have a look at, we've got a 5-minute chart of the Dow. Let's just drag this across and have a look at yesterday's price action. You'll see at the start the market moving to the downside. Started off well, then it just turned south, consolidated. As you can see, they're trading in 89%, 78, 89s, until we moved down to this level where the market found support, and then it was brought back to the 200 MA. Choppy session, and then the sell-off towards the end there at just after 9 p.m. But overnight prices have regained 100 points straight off for the Dow. In the German DAX, find it. Let's just have a look. Is this the DAX? Nope. So this has got to be it. Let's have a look at the daily first. We can see that yesterday prices moved lower. Now I mentioned yesterday that when you make a new all-time high, generally the next day is a down day. And we started off well. If you have a look at the 2-minute chart, the futures market kicked off. They managed to put in a new all-time high yesterday morning. This happened in the pre-market session, and then prices traded sideways until the market opened, and then it was straight down. And they do this for a reason. And that's, they know there's going to be a lot of people who think because the market's made a new all-time high, it's going to move to the upside. So come in and just slam and shake out any weak longs, and then they'll buy back, as you see here, get down to the DP. They come in and then buy back. The market trades sideways for a bit and then just makes its way back to the 200 MA where it already had resistance to the left and continued to have resistance before the end of yesterday morning's session. And then again, just continuing to trade sideways there and banging its head against the 200 MA. Just move this back a bit so we can get a better picture. And then in the afternoon, the market moving lower. Just get rid of that from that 200 MA mid-morning, sorry. And then the afternoon kicked off back to that 200 MA where the market had struggled, and then straight below the DP and down we go. It sits in a sideways range though for the rest of the afternoon. It was very boring and tedious, and then the final kick down in the Dow that we saw. We see the DAX doing the same before prices are then brought back, and we see this coming back overnight to where market is currently. We just get to the end, sitting above the DP and the 200 MA. So let's have a look at where we are. In fact, what I'm going to do, what I've loaded up in the last couple of days is a 30-minute chart, which is really nice to look at. And on here you can see how the market trades to all of these relevant areas. Yesterday trading up to the high of the previous day, well through it, to this BRN. If you're wondering what these S's and D's are, this is something that I'm working on at the moment. This is the supply and demand. Demand showing buying coming into the market and supply showing selling. So after the first 30 minutes yesterday, we saw this is in the futures market, and then we go into the main market where prices move lower. You can see prices finding support at the DP. They trade sideways, they break the BRN, they trade through the DP level this time. They try to come back until the Dow opens, and then they trade lower all the way down to the S1 level, which is down here. And then as we go into the evening, we get a rally back, and then we get an 89% retracement here as well. Just draw this in for you. So from here to here, you'll see the market sit at that 89 level, and you can see the demand coming in as well. You get demand as the market moves lower, but the Dow sorted this out and moved in, and as the markets move back, we're now above the DP, stuck in a sideways move. And the reason for that is quite simple, because if you go from this high that's left behind to this low, you will see that the market is sitting at 89% in the 30-minute chart. So a bit of weakness around at the moment. The DP level is going to be important. A bit of demand coming into the market as well. So this one gives me a really good indication of where the market could move to, given these areas that it breaks, and it seems to adhere to this. You can go back and look further in the chart, and you'll see exactly the same thing. All of the pivot points and the psychological levels as well play an important role, along with the fibs, and this is a great way to stay in the trade a bit longer as well, as opposed to just jumping out. So for example, if prices move lower today, you'll want to see them break the DP and then down to the close, and then find support here, which of course we've got a gap here as well, which generally gets filled. On the upside though, again, we can see that we've got nothing in the way once we get through this psychological level, and that takes us back to yesterday's high, which we see here happened in the futures market. So it gives you you're able to step back and look. You've got the very long-term picture here in the daily chart, which I absolutely love the daily charts, and then you can scale down into smaller time frames, and then eventually down to the 2 minute if you want to trade that, or any 5 minute. But you can use all of the information that you see in the bigger time frames to handle the trades in the smaller ones. And again, you see exactly the same picture that we've just looked at in the 30 minute, just by compressing the price bars there. But looking at inside of this, we can see at the moment that the market is currently above the 200 MA and the DP, which is a bullish indication at the moment. So a quick look at the metals and the dollar. Yesterday was the options expiration for the silver market, as I mentioned. And when we looked yesterday morning, which is quite funny, because if we come back here, I said, there we go. When we had the shakeout, as I was recording, it went to the low, and I said that, this is likely to be the low of the day, and it turned out to be the low of the day. There was some volatility when the silver market opened. The options expiration is within the first hour. You see the first hour there. The market came back. I was watching this, and it was a no-brainer for me. I just bought as we came back to that 78-89% retracement from here to here. And I'll just redo this, and I'll get it right in a second. And yeah, the market just traded down to this level, and I just added another position to my existing ones, and then the market was free to move back to the upside. Mission accomplished. They've collected the premiums on the options, and prices have been able to move higher. Now in the daily chart, we need to take out this 28.32. We also need to get rid of this 78%, which is also the high that we've seen of late. And I'm just going to remove this because I want to draw in from this high to Friday. I think that's Friday's low, isn't it? Yeah, or Thursday's low. It doesn't matter. This low. And we need to see prices get through this cluster of fibs as well, making its way back to here. So we want to see the market through that 28.339, which ties in with that high that we had across here, that one that we just removed. So there's a two points in the chart there. You can see that now. Might as well put it back in. So yeah, we need this. You can see there's a lot of resistance in this area. We need to see something significant to drive through this and head back to the all-time high, the recent high of 29.49 for the silver market. And what will assist this is the dollar. It's broken the 89.66 that we had in the chart for a while. So let's just have a look across to the left, see what we've got in this market. All of this volume, by the way, is the rollover from the March to the June contract. There's nothing significant there, unlike the gold chart that we've seen for the last month where prices have moved higher. So we need to see, let's have a look. We certainly want to, we've got this low here to this high, so let's just draw in a quick fib retracement there. We're already through that 89 there, so we can dispense with this. So we'll just take the low from here, is the next downside target, 89.16, and then of course the psychological level will be an interesting one should the market be able to take it out, which of course will be the 89 level. So we'll leave that in there. I'll get rid of this now. No, I'll leave it for a couple of days just in case the market bounces back from this. But yeah, that's what we're looking at, 89.16 for the dollar to move lower. And in gold, this also moving higher. Now, unlike silver, this has actually moved a bit, certainly with more momentum. It's actually taken out that recent high to the left, whereas silver hasn't done it yet. So it's got to play catch up, that's for sure. But yeah, gold moving nicely to the upside. Again, monthly chart, the longer the time frame, the happier I am. So you can see the longer term picture of a market. It allows you to stay in it for a long time. Again, you can see that we need to take out that 2000 level. Once we do that, then we just keep going. And the volume continues to build as well, supporting the precious metal there. And monthly, yeah, again, you can see that in silver, the monthly chart, that needs to... Again, you can just draw the fibs in and you can see where we've got problems in this, from this high to this low. I don't know why that's just sprung down like that, but let's just have a reset the chart. Must be another line that I've got on the chart somewhere. But you can see that, yeah, there is this another line. So we need to take out the 78 in that. This is the monthly chart, yeah, and the same in the weekly chart. You can see that there as well. We've got that same resistance to the upside from here to here. And again, if you were to mark up all of these, you can mark up the sideways move with all of the fibs at the pertinent points. There we just got a double bottom across there and a double top across there, but you can see how it's trading in the weekly chart there. Just need to take out these resistance areas. Okay, I think that will do it for this one. Just a quick look, see if the in the German DAX, it's gone very quiet, waiting for the futures market. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.